Good morning. We're at Entercom's 2015 Oil and Gas Conference. This is the 20th year of the conference. We're being joined by Mel Riggs. He is the president of Clayton Williams Energy Incorporated. Good morning, Mel.
Good morning. How are you doing?
I'm doing well. So pretty big conference. Have you been coming here for a while to the conference?
We've been here for several years. I can't remember how many times we've been here. It runs together over time, but it's been a great conference for us.
It's gotten bigger though, hasn't it?
Yeah, great investor turnout. Lots of investors. So
what are some of the things you enjoy about coming to the conference?
We like the weather up here. I'm from
bet
West
you
Texas.
do.
It's been really hot, 100 plus every day, but we like the weather. And we like to catch up with people and then see our investors and some analysts. And
you know, with a temperature a high of 80 today, you might be in a little bit of shock from the weather.
I'm going to put on a heavier coat later.
Wouldn't that be funny if you did bring a jacket for it? All right, I've got some background and a few questions for you, so let's get started. First of all, congratulations on a solid second quarter with strong production, I understand. Net production was up 7% to 16.6 thousand barrels of oil equivalent per day. 59% of the daily production was from the Delaware Basin and other Permian locations, and 21% was from the Eagle Ford. The compound annual growth rate of production from your core assets is 74% since 2012, and you have 340,000 net acres in your two core basins. So the question, what's the long-term plan to develop those assets?
Well, right now our long-term plan is, first of all, get through the short term. It's a challenging period with oil prices being low. And so we are not as much in a growth mode. We actually were able to keep our production pretty level, or actually grew a little bit in the first half of this year, but with really no rigs running. We fracked wells we drilled at the end of 2014. Our production's held up much better than what we expected, so we're very pleased about that. So we're at a level higher than we were last year with very little activity. And so right now we plan to try to hold our acreage together. Like you pointed out, we have a very large acreage position in two of the best resource places in the United States, and we have minimal capital drilling that we have to do to hold that. So that's our plan. Try to get through the short term, and hopefully things recover in the next year or two.
Yeah, excited about 2016. All right, so we know that 2015 has been a challenge to the entire industry due to the significantly reduced oil prices. So what is Clayton Williams Energy's strategy for this downturn?
Our strategy early on was to, first of all, we started reducing our cost. We've taken our operating costs, our G&A, our well operating costs down by about 19% year to year.
Quite a bit.
Yeah, it was painful, but we got it done. And some of it was helping become more efficient. We've also reduced our drilling costs, our well costs, by 30 to 40%. So it gives us the ability to probably drill in our resource plays the cheapest wells we may ever drill. And we've got the cost at that level, and hopefully, and possibly they'll come down lower since oil prices continue to be down. So we've worked on the cost side mostly. That's been the main focus, and we've sold some assets to raise additional capital too.
You said painful, but obviously very effective. I mean, you did a good job of bringing those costs. That's quite a bit. Yeah,
I mean, I've been in this industry since the 80s, and I've experienced 5 or 6 of these downturns, and they're always difficult, and you have to react and do things. So
to be successful.
That's right.
Yeah.
You got to survive.
Right. All right, can you talk about the development plans in your core basins for the second half of 2015?
Yes, so we currently have 2 rigs. We put 1 rig in the Eagle Ford and 1 rig in the Delaware Basin. And that holds our acreage together. Those two rigs running. Our plans right now are to continue at that pace to the end of the year. And that adds about $57 million of CapEx for the end of the year. So
let's talk about the specific objective of the drilling program in the Permian.
Basically, our program is totally geared toward proving up the resource rock and the Wolfcamp formation out in the Delaware Basin. That's our focus right now. There are several different benches or productive zones in that basin. We've proven up 2 of them, the Wolfcamp A and the Wolfcamp C. We've de-risked probably 2/3 of our 66,000 acres over there in for those 2 zones. But other companies are surrounding us, we've got big companies around. We've got Noble Energy, Oxy, Chevron, Concho, which is also based in Midland, great company. We can hold our position. Those companies are going to show us the way on a lot of other opportunities as they drill wells. So, exciting position.
All right, let's talk about the projected capital spending for the balance of the year.
Yeah, the total CapEx for the year will be $135 million, roughly. About 50. We're going to spend $57 million in the second half, mostly on drilling. That's the plan right now.
All right, now I understand, Mel, in Reeves County, you've got 24 horizontal wells on production in the Wolfcamp A and another 4 horizontal producing in the Wolfcamp C. Your long lateral profile was 5,700 feet that yielded EURs of 750 MBOE.
Right.
So can you talk about the drilling and completion efficiencies that you're targeting for additional long laterals in the Wolfcamp?
Yeah, so we have typically not pushed the envelope on the length of the lateral. We've been drilling anywhere between 5,000 to 6,500 foot laterals. What we're seeing in the basin, though, is the bigger companies are drilling longer. And there's some private companies that are well capitalized that have drilled 2 mile, 10,000 foot laterals. So we're watching the results from all that. We'd rather not, we didn't really want to spend our capital to test others are testing it for us. And so we're gathering up all the information, learning from what's happened. We do believe that longer laterals are probably going to be a good thing. And we're also looking at how companies are completing or fracking their wells. And a newer development, I think, out in our area is the slick water frac. We use a lot more water in the frac. We're seeing some positive results from those efforts at this point, which we may adopt.
Well, that's exciting to see these new developments like that.
Right, it's getting better. The Delaware Basin, we've upped our EURs the last couple of years dramatically based on well results and production, which is the way you want it to work.
Right.
You want to get better.
Yeah.
And costs are coming down.
Excellent. So. All right, in your 2Q presentation, you mentioned further divestment of the company's non-core assets. So let's talk about the assets that you're looking to divest.
Okay, we have 2 core resource areas, and one in the Eagle Ford, 170,000 acres, pretty much all contiguous, a block. We have scattered assets that aren't part of that we have been selling. And we sold one property in the first half of the year. It was roughly $22 million to a private company that needed the acreage. We're doing the same thing in the Permian. We have a large number of properties that are held by production in most cases. They're older fields. We operate about 1,000 wells. They're all scattered across these fields, and so we will be selling off. We're working on a couple of deals right now, and to continue to raise capital and really refocus the company on the resource plays. That's our future.
All right, looking farther out, what's your best guess as to where the industry will be about a year from now? When we're sitting here next year, what's going to be happening?
If you had some whiskey, I could probably tell you.
I don't have any. I'll get some.
It's again, we've seen this. We've been here before. This seems like it does have an 80s type, a late 80s feel. 86, we had a long, protracted period. We had an oversupply of oil. I think this is a little different in that the oversupply this time is a little less. It's not as dramatic. And the world demand is 2 to 3 times more. The world demand for oil is 2 to 3 times more. And so it's just going to take time for this supply and demand situation to rebalance. And so nobody in this room at this conference knows the answer. There's nobody on the planet that knows the answer. But so you have to just run your business and try to keep your business going in this process. And as an oil and gas company, and that's been my career, you're always an optimist. You have to be, or you wouldn't be here. So that's what we have to carry forward.
So what's the focus, Mel, for Clayton Williams Energy in 2016?
Well, that depends a lot on what happens with oil prices. If we continue to be in a low oil price environment, we will we'll probably be in a mode where we mainly try to maintain our acreage. We'll probably run 2 to 3 rigs all year. That would be our plan. If oil prices improve, we have the ability to then accelerate our program. It's really going to depend on what happens with oil at this point.
All right, so I have to ask you just mentioned about being an optimist,
Yes.
off of the hardcore questions. I'm just curious, this is a big position you're in. You've been doing this since the 80s. You've learned a lot from what happened in the 80s.
I hope we've learned.
How did you get into this in the first place? Had this been your plan? Did you grow up in Texas? Was this something you wanted to do with your life? How did you get into oil and gas?
Well, I did. I grew up in Texas. I grew up in a ranch out in Fort Stockton, Texas, West Texas, not very far from where we're drilling right now. Actually, we ranched on the highway to Pecos, Texas, and we're drilling all this south of Pecos. The guy that I work for, Clayton Williams, who founded our company, that was his hometown also. So I've known Clayton really most of my life. I've known Clayton.
All right, I'm Angie Austin with Oil and Gas 360. Thank you so much for joining us for our interview with Mel Riggs, president of Clayton Williams Energy Incorporated.